Many thanks for joining me. Welcome back to the marketplace. Now, the new owners of ECG Meralco could have their contracts abrogated if they fail to meet key performance indicators in their contracts. This is one of the measures that has been instituted to ensure that Meralco indeed brings about the required transformation of ECG. Government has put in a clause that allows the 20-year contract to be reviewed every 5 years. Martin Ison Benjamin is Chief Executive of the Millennium Development Authority, MIDA.
The company that won has been in this program since 2015. 2015, they were shortlisted, right? And they were shortlisted after they've seen the RF, they've gone through the documentation and seen what is in store for them. So generally, even though they are coming in 2019, they have been in this, literally working with our documents for the last about 3 years, right? So as businessmen, I don't think they will run shy of coming in to look at what is relevant, what is right, what is all right. Probably they are laughing in the sense that they are low-hanging fruits, which ECG might not be seeing. They may come in and pluck those fruits, and then they do a better business. So government has said that they will not terminate the appointment of any worker. That the whole 6,000 workers working with ECG must be transferred to the new company. The new company has agreed and accepted and signed off on that. So if they shirk that responsibility, then they would have gone against the contracts that they signed. And then any penalties that must be taken will
And that's a key KPI as well.
Yes. Look, we're not dealing with a 10-year-old business. This is a 115-year-old company, resident in Philippines, who came and bid and won. So I take it that except we think that there are no other businesses elsewhere who are more knowledgeable. To me, it's a opportunity that we have. Let's leverage it and use it properly.
Now, international oil exploration firm Aker Energy says the total estimated volumes of oil to be included in its plan of development for the Pecan field could increase to 1 billion barrels. That is, if further drilling campaigns prove successful. The operator of the deep water Tanoke 3 Points just concluded its first appraisal of its oil field. Jan Hagen is CEO of Aker Energy Ghana.
Chief Executive Officer of Aker Energy, Jan Hogan, says they were pleased to announce the well results and would optimize the plan of development for the Pecan field. He said there was still a lot of work to be done, including to conclude the phasing of the development, the size of the first phase, and the detailing of the concept. The important priority going forward is to deliver a robust field development plan for Ghanaian authorities. Based on the existing subsurface data, the existing discoveries are estimated to contain 450 to 550 million barrels of oil equivalent. Aker Energy estimates that with the next 2 appraisal wells to be drilled, the total volumes to be included in the plan of development have the potential to increase to 1 billion barrels of oil. In addition, there are identified multiple well targets to be drilled as part of the greater area development after submission of the plan of development. Aker Energy says it sees great potential in this promising area offshore Ghana. Mr. Hogan said Aker was looking forward to continuing and further strengthening partnership with the Ghanaian oil and gas industry.
Also, production is expected to begin in 2020. Now, earnings from oil exports could have potentially a double figure if projections for the next 2 drilling campaigns become successful. That's on marketplace. Let's move on to other stories. And now, some experts are concerned it may take longer to raise 2 billion cedis from private pension funds to save struggling local banks. Some experts are concerned it may take a while longer to raise the amount of money to recapitalize struggling banks. Government created a new entity, the Ghana Amalgamated Trust, to save solvent banks which were unable to meet the 400 million Ghana cedi requirement. The 2 billion cedi is supposed to be raised through private funds. Let's hear from CEO of the People's Pension Trust, Samuel Waterberg, and pensions expert Andrews Agbobi, who are skeptical the funds can be raised within the shortest possible time. They spoke on PM Express Business Edition on JoyNews.
Look at the assets of the pension, the private pension trust, which is 11 to 12 billion, and out of it, 30% can be invested in bonds. So then you're talking about between 3.5 billion. So that 3.5 billion, indeed, of course, will meet the 2 billion. But the assets have already been invested. So it means that if we want to raise the 2 billion, it's new inflows that will come in, or we have to de-invest some of our assets that we have. And my concern that I have is that because I read that they wanted to raise this 2 billion in March 2019, which I think will be difficult to raise new flow of pension contribution before March 2019.
Mr. Andrews,
yeah.
Do you think we can get 2 billion in this market?
That is where I also have a bit concern about the funds involved. Because don't forget, last year, MTN tried to raise, 3.5 billion. What they got? 1.1 or 1.2 billion.
Yeah.
That's what they got from the market. But don't forget, maybe that is equity. So, but the other side, depending on how this bond is issued, for example, if we open it up to invite international, if it's treated as not only to the local market, then I think we can get that 2 billion.
Now, Managing Director of Barclays Bank Ghana, Abena Seipuku, has assured that the transformation of Barclays to ABSA, which is expected to be completed this year, will give more opportunity to the bank to improve its support for the private sector businesses. She said the bank is on course to ensuring that more funds are available to grow its SME base. She made the disclosure at the 2019 Crystal Ball Africa Conference in Accra.
So as an industry, we are currently very well capitalized. We are also more liquid than ever before and better positioned to support your businesses in a sustainable manner. Having closed this chapter, banks must return very quickly to our core mandate and continue to provide safe and trustworthy avenues for customers to save your money, as well as funding and financial advice to drive business growth. We must do this with zeal like we have never done before. We owe it to the people of Ghana. As the Euromoney 2018 Best Bank in Ghana, this is exactly what we have been doing and will continue to focus on in 2019 and beyond. We are driven by a bold new strategy that is hinged on growth. So it's growth for our customers and our clients, growth for our shareholders, growth for our communities, growth for Ghana and the entire continent. A number of you have been asking me what our journey is like, transforming from Barclays, which has been here for over 100 years, to ABSA. I'd like to take this opportunity to assure you that our transition to ABSA is on course. You'll be seeing more of our new strategy unfold in 2019 as we position ourselves with transformative solutions to the unique needs of our clients and our customers in Ghana and in Africa. Once again, I want to reiterate that we are very passionate about helping to bring your possibilities to life. We are ready to support you, to support your businesses through 2019 and beyond.
Let's now move to the Bonahaf region, where some mango farmers at Kintampo in that region are cutting down their mango trees to make way for the cultivation of cashew due to the massive infestation of bacterial black spot disease. About 80% of mango farms in the area have been attacked by the disease, a situation not only reducing yields significantly, but also threatening the sustainability of the agribusiness subsector. Correspondent Nesta Kafri Ajuma visited some devastated mango farms in Kintampo and reports the farmers want a quick scientific solution to the bacterial black spot infestation in order to sustain their businesses.
Bacterial black spot disease, often referred to as BBS, attacks mango trees and weakens the branches, causing cancers on the fruits and eventually forcing the fruits to drop prematurely. Since it was detected in Tamale around 2010, the disease has been reported in Kintampo in the Brongafo region, as well as other parts of Ghana, including Manyakrobo in the eastern region. Several efforts by the mango farmers to control the BBS by themselves have not been successful. Some farmers who spoke with JoyNews indicated they spent not less than 3,500 Ghana cedis to control the BBS on an acre of land without any positive results. Secretary of the Kintampo Mango Farmers Association, Samuel Ifa, observed government's efforts to get the disease under control is very critical.
When I started harvesting first, I got only one box of mangoes. 4 acres. So for about 3 years running, I couldn't have any improvement. And then I wasn't the only person that was affected. It affected almost every member of the association. BUSAC came in to help us resolve the problem of fruit flies first. And then it turned to BBS. And at the moment, BUSAC has given KINFA some funds to try to advocate, to get help from the government.
The imminent business collapse posed by the bacterial black spot disease, therefore, has dire socio-economic implications for the mango production value chain and the national economy as well. The Ministry of Agriculture, in collaboration with all stakeholders, need to surmount this challenge if the vision is to make mango a major foreign exchange earner and a lucrative business locally.
Our challenge is the BBS, bacterial black spot, that is destroying our farms at the moment. The short-term solutions that we are looking forward for is that the government comes out with a chemical that can control the disease.
Our expectation is expecting the government to do very much by bringing in more chemicals that can be used to control the BBS. We need more of the fungicides, which they use to control the black spot in cocoa. That also can be used for the control of BBS, bacterial black spot in mangoes.
Nesta Kafui Ajoma's report.
Let's come down to the Ashanti region, and owners of shops given to traders from the Ketia market in Kumasi by authorities to make way for a redevelopment project are threatening to eject them. It comes after over 100 shops were locked up for more than 48 hours over unpaid rent by city authorities. Both the private developer and the KMA on Thursday renegotiated for extension for tenants till March 2019. CEO Bryce Achamfor says his company will no more give out the shops to the KMA after the extended March deadline elapses. Prince Appiah has more in this report.
More than 100 shops here at the mall were locked up following repeated warnings from the facility owner. The private businessman rented out the space to Kumasi Metropolitan Assembly for relocation of traders for the Ketia redevelopment project. Traders explain the situation has had serious implications on their business.
Yada came for no as a chamfor. Yada nasi. Say a ban of Panania baby, a baby and near Melgunti. Ye be and near money baby, go about and said there be a bit me at home. Until ye the masses of my baby are my.
Since it was locked, it has really affected our business. Though we are happy they have opened for us, we are waiting for KMA to distribute the stores at the Ketia market.
They say no, yeah, try KMA in some Babuai night, a Ketia. Bibia best at Yama and a free animal, and one a problem until Damas.
Chief Executive of Achemfor Market, Bright Achemfor, rather accuses the traders of using KMA documents to rent the shops to others.
It's not a matter of rent. They give it to banks and so for the loan. They use the KMA location document for the loan. So it is a matter of selling the store. Without they don't have any right to sell it. We have a document to show. So I think they came to make sure business will not continue because they don't have right to do that.
Are you going to press charges against those who are trying to sell?
I formally complained to KMA. So the KMA is the tenants to the Chamfor. So I think it is a matter of the KMA. Okay. Yeah, at least end of the March, at least.
Are you going to renew?
No, we are not going to renew the shop to KMA again. No, we are not.
How much is City Mayor Osayesibe Entry met with the private developer to iron out their disagreements. He gives some details of the renegotiated deal.
Selling. So all those who have sold it, they don't have that right. So as a matter of fact, we are also going to assist H&4 to look into all these wrongdoings. But the assurance is that now we have all agreed in principle, we are moving down to get the place open. And within the short time, we will communicate on paper to him as to the number of months that we will need for the total handing over of the property to him.
So this is Mr. H&4 says he won't give out the shops to KMA for rent again upon expiry of the current agreement in March. Prince Apia reports.
And back in Accra, the Association of Abossey Spare Parts Dealers say the dealers are hopeful of making profits in 2019. Co-chairperson of the association, Clement Boateng, tells Joy Business that even though prospects for the year are bright, the performance of the cedi against the major trading currencies will still be a key determinant. There's more in this report.
The acting government statistician David Combat early in the week revealed that the main price drivers for the marginal increase in the year-on-year inflation for the month of December 2018 was transportation and increase in the cost of spare parts.
Consistently, whether there's a price increase in there's a change in fuel price or not, the inflation rate for transport is always the cost of the increase in their rates. And spare parts is also one thing that has to be looked at. It's not fuel, but the car owners, transport operators would usually also increase their fares if they see that the cost of spare parts is going up.
Joy Business, however, got in touch with the co-chair of the Abossey Spare Parts Dealers, Clement Boateng, who has a rather different opinion. According to him, cost of spare parts remained unchanged in 2018 due to poor sales.
At least for the last quarter of last year, the exchange rate has been a bit stable. So I don't see the reason why we should increase our prices, because if you go bear with me, we have been complaining over last year that patronage of our goods was not the best and that people are not buying. So how then do we increase prices? So I don't know the basis that the GSS came out with that determination.
That's right. Okay. So far, it is very clear that even though the economy, according to them, is picking up, they're yet to see the gains in the future. For Joy Business, I'm Charles Aite reporting.
And that's a wrap on the marketplace today. Many thanks for joining me throughout the week, and good to have you all the time to do business on the marketplace. We'll bring you some more business next week. My name is Emmanuel Apuachi. We have to enjoy the weekend.